Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for the weekend edition. I'm doing it on Sunday. This is the 6th of March, 2022, just after 6 p.m. I didn't do it earlier as I normally do, and the reason that I didn't do it earlier is I didn't know what to expect over the weekend. We can see that the events, more fighting, ceasefires that were called don't hold up. The world talking about doing away with importing, at least in the NATO countries and the U.S., the Russian oil. I think the pressure on it, on the president, is insane not to do it. Now, I looked to see how many barrels of oil we have in the strategic reserves. The last numbers I was able to see today were 1.4 billion that are owned by the U.S. government, but there's 4.1 billion in the reserves total. So, there's other companies and so on that store it there. So when the Biden administration releases 30 million barrels, it's a pittance. It's nothing. But more important, if they'd finished the Keystone Pipeline, pretty easy to get done, you would make up instantly everything you lose from Russia. But wait, it gets even worse. What if you uncap some of the wells? Give reasons for that to happen of the wells that the big oil companies aren't doing. Well, the game would get even better. So we don't have the solution in hand because of politics. If the Biden administration would change their politics, get away from this nonsense green in the time of a war, come back to it as the war ends, and that could be 6 months, a year. You don't know what the impact's going to be. Revisit everything, but do it smart. Show the oil companies that, hey, if for a year, they're not going to do the wells. They have to have a guarantee what's going to happen. The Iran talks, well, Russia has said, hold on, let's not do this deal if you're going to sanction us, Russia, for anything going on that we're doing right now in Ukraine as we invest in Iran and so on. Are they nuts? Why would we do that? If anything, you want to hang Putin one way or the other. I'm not talking death to the man. I am talking you want him to be responsible for the war crimes. You want him to be responsible for all the damage he's inflicted here and so on and so forth. I'm no Lindsey Graham. I don't go out and kill the man. That isn't what I do. But there are ways around it. But the reason I didn't do anything is I didn't know what to expect. Now that we're open, let's review. And before I begin, I will not be here this whole week. I will be out of town for 1 week. There will be none of these updates. They will resume a week from Monday on March 14th. Okay? All right. So when we look at a monthly area chart of closes, what's the logical number for this market to go back to on a monthly basis to find support? I contend it's the 4170 level, the 18-month moving average of closes. We did it back in 2020. We did it in 2019. You went back and hit the market in 2016. You didn't stay under it very long. It is a monthly chart. I wouldn't be surprised if that's where the market goes down to. When we go to a weekly chart of just closes on the S&P, you can see how the market just keeps nosediving as you're coming in. Have we taken out last week's low so far? That would have to take out 42.50, 150. The market's at 42.63 as a low right now. We're trading not too far, about 8 points over that. But where's the swing lines then? The swing lines are right here. Lower highs, lower low. Now, if you don't take out 44.1875 this week, what will happen is the next swing line will drop down to that number. What about resistance? Well, on rallies, I think you're going to have aggressive selling back at the 45.38 level. The problem is I don't know what would get it up there. I guess it would take the end of the war. So I guess if Russia were to say we have found a way to have a ceasefire and Zelensky was alive and staying in power, how do you do that? So what about Zelensky saying he surrenders and gives up Ukraine? Okay, maybe that will kick it to the upside. I don't think that's a scenario either at this point in time. Down the road, I don't know. But right now, I think the Ukrainians are all hell-bent to fight. What about Bollinger Bands? Well, this is where bigger support's coming in. Each time we've been hitting this band, we are finding the support area. So therefore, the 42.30 level, 42.29, as you can see, that's my zone where I'm looking for the market to find its support. That's where I think those that are short here will be trying to take another round of money out of the marketplace if it can get down there. When we take a look at the S&P, it's the same thing. You hit the band, you bounce. You hit the band, you bounce. Now the market's trying to come back down to it. Look for the support at the 4230 level, obviously. The Dow, as we are on the Dow, we're riding the Bollinger Band. You've been riding it now for about 4 weeks or so, as you can see, just hanging in there. If it wants to continue riding it, you might be headed back to the 31,500 level over time. I don't think you're going to get aggressive selling of a prolonged move under a Bollinger Band. I don't think the pros will do that. In the NASDAQ, I would not press the short side beyond these numbers, the lower band and the 100-day average. That's pretty powerful support. That doesn't mean it can't go lower, but when I look at numbers like that as a chartist, throw off the chart, throw off the world events, that is an area that the smart money will be covering, in my opinion, a heck of a lot of short positions. The Russell is already in that. It's fighting its battle at the 100, down to that number. It's widening a little. You could fall a little bit more. If you were to get over last week's highs, by the way, in any of the indices I just covered, that means something changed in the game. And you probably can carry further than you think to the upside if that occurred. So warning while I'm gone. In the 30-year bonds, I'm looking for more of a rally, but I think it'll culminate in between where prices are all the way up to 159.21, the next 200 points. The most likely first resistance, the 18-week moving average. What is the Fed going to do with this scenario becomes the big question. And the same for other countries around the world. Central banks have their hands full. They want to fight the inflation that the high energy is certain to bring, that the food inflation is certain to bring. But they don't want to kill the economies. What do? This is probably for Mr. Powell and the other Fed governors the most difficult part they've ever seen in their tenure at the Fed. That's my guess as to what they're fighting right now. As we look at the 10-year, look for the resistance to start at 129.05 all the way to the 100-day average. In the dollar index, the one thing I teach traders is not to add contracts, not add to long positions over an upper Bollinger Band. Frankly, the first time you hit it, I tell traders, after you've been down like you were here over and over, I think that the smart money came out of the market about 2 weeks ago, and I think they're watching it trade higher, but I don't think they're involved in a big way. In the eurocurrency, a higher high, lower low. We were just talking with the market get to 110. It's 108.85. Still coming down. You can imagine what this is doing to their economies as they're trying to buy anything priced in dollars. They're seeing more and more inflation. In the Canadian dollar, we saw the Bank of Canada raise its rate, give the market a kicker, but now the war, the events, the oil prices, everything's weighing on it, and it's back to a neutral position. I'm very surprised the yen isn't getting more of a safe haven bid. Not sure what to make out of that at all. The trend is actually lower highs, lower lows. It's bearish. You need to close over 87.42 and a half to start more of that to the upside. You got to take out this high, close over that, then maybe you can get up to 88.75. But it's watching all that's unfolding. Possibly what they're saying is the U.S. has no intent of going into this war other than to defend a NATO member. NATO is not going to defend Ukraine. They'll give them armaments, but they're not going to be drawn into the war. And I think that is what you're looking at here in the yen. In Bitcoin, market setting back. It's following more the stock market than it is the situation of the war. I think you can see that you are in a downtrend. You've stayed under the 18-week average. The next support's 33,560. You literally have to get over this high. I'll give it to you right through here. 45,905 to put the fear into the market that it's made a bottom in the short term. I don't think it's buying into that. Then we get to the differential between Brent and WTI crude, and as you can see, not that big of a differential, hanging here at about a $3 difference. Here you are in Brent again. Now this is a sell-off tonight. This market got as high as 137. It's down $9, $8 from where it got to a high, but it is in a run. It's embedded. When you're embedded, you're looking to be a buyer on pullbacks, but not when you're over the upper Bollinger Band. I would never tell a trader to do that. WTI crude, the high was 130.50 tonight. It's hard to believe you're into the 130s in this market. It's still comfortable at the 125.90 level. There are people picking tops. They're out of their minds. There are people trying to buy these breaks. How are you going to control the risk in this market? You got to trade these ultra small contracts, and even then, I think there's a time where you say the game is too risky. I own a brokerage firm. I hate saying that. Rebob gasoline, up and away. I drove to Indiana to fill up. It was 80 cents cheaper a gallon than it was in Chicago today. 80 cents a gallon. I had to go for a family event anyways. When it sounds far away, I went to Indiana. It's 45 minutes away. So I had to do something at my family home and then got back to Chicago afterwards. But I'm there and I go, why not fill up? Because I know it's going to be in Chicago. 80 cents when I looked at the pricing. So you put this all together, you get your game plans. I'm going to be gone, but while I'm gone, I'll probably do my ETF and my futures updates. Now, I'm not going to do them at 5 in the morning the way I normally do. I'm on vacation, but I will get them out. I like doing that. It keeps me up with the market. I'm not going to write my normal updates. Don't feel that I have to on a vacation, but I am going to keep you informed as to what I'm seeing. Now, what I do is I cover 40 futures markets and I cover 40 ETFs. Specific buy here, sell there, do that. The ETFs have been easier to trade in the past 2 weeks than the futures by a lot. The risks aren't as big. You're still catching those moves. And remember, ETFs are a proxy for what futures do. When you trade OIL, what do you think you're trading? You're trading futures, the crude oil market. TLT, what do you think you're trading? SPY, DIA, all the same thing. But you can do it in either futures or that. And with these micro mini futures, it is a lot of fun. So those you can trade, they're 1/10 the size. So that's where you want to be if you're going to trade them. Still pretty risky. In any case, how do you find out more about this? Just go to our website. Under the word research, everything is laid out for you there, and give it a try. I think you'll find in a war environment, I've got plenty of experience in it. Maybe I can just throw out an idea or two that might make sense for you. I'm Ira Epstein. You have a good one. I'll see you Monday, March 14th.